Good morning, everybody. It is about 5:20 here a.m. on the West Coast. I've got my coffee. I've got my butter in the coffee dissolving. It tastes delicious. That's right. Guys, this is probably going to be the biggest crypto news for the day, but it looks like the Cardano Shelley has launched. What is this? This is their upgrade. So it looks like they've just hard forked Cardano. So I don't know what that means in regards to what the other currency is going to be called. Generally, when we have a hard fork, that means that they split the currency into two separate currencies. So if you're holding Cardano on a ledger or on ADA Lite or something, I assume you're going to have two coins now and the same amount of both. Maybe I could be wrong, but that's what happened when Bitcoin hard forked. That's what happened when Bcash hard forked. That is what happened when Ethereum hard forked into Ethereum and Ethereum Classic. So anyway, the bigger news here is that Cardano has now launched its new protocol, which is going to increase the price for sure, I think. People are going to be excited because they've moved away from proof of work to proof of stake. So Cardano is not going to be mined anymore. It is going to be staked, meaning all you got to do is put your coins in a certain wallet or a certain folder or a certain pool, and you will be able to just generate more Cardano by doing that. It's like passive income, building money over and over. And the more Cardano you have, the more you're going to make. So it's kind of like compounding interest and like dividends. Very cool. I'm very excited about this, but let's read the article. Cardano has now officially transitioned from the Byron mainnet to the Shelley mainnet via a hard fork. The launch of Shelley has now brought about staking and helped Cardano transition from a centralized federated system to a fully delegated proof of stake. Users are now able to cold stake ADA directly from their Ledger hardware wallets, while support for Trezor will be available in the following weeks. So if you have a ledger, apparently you can just stake it straight from there. We'll see, because ledger's interesting. Like, you had to, when you put your ADA on ledger, you had to go through the web browser to access it. It was very weird. Not a ledger's direct software like Bitcoin and Ethereum can be accessed through. So we'll see about that. Users can expect to earn 5% API a year on their staked ADA. That's 5% returns. That's pretty freaking awesome. IOHK has provided a neat staking calculator on their website, which lets users roughly estimate staking rewards. Okay. After almost 5 years of development, Cardano has finally transitioned from the Byron to the Shelley ERA. IOHK, the company behind the ambitious blockchain project, has activated Shelley hard fork today at 21:44 UTC, marking the beginning of an exciting new period for Cardano. While the hard fork was very much a non-event in a practical sense, as those holding and using ADA didn't notice anything, the technical development that went into introducing the hard fork is the culmination of a process that began earlier this year with the launch of the Ouroboros BFT. Excellent. Shelley is the most significant upgrade to Cardano since its inception, bringing about new architecture and an entirely new set of functionalities. Users can now begin to register stake pools on chain and make them visible to delegators. As many pools that rolled over from the ITN have already been running on the Shelley testnet, the process should take no more than a few hours to configure. Staking of all kinds is now available to everyone. While the process is now officially open, it might take several more hours before all these pools become visible on the data list UI. People are now able to begin delegate during Epic 0, which will last from July 29th to August 3rd, after which the first stake distribution snapshot will be taken. Rewards for those that have staked their ADA during Epic 0 will be distributed at the end of Epic 3 on August 18th. From a practical standpoint, the only major change felt by ADA holders was the need to download the Shelley version of Daedalus to resume the normal usage of the wallet. The upgrade will give Daedalus a hardware wallet center, which will enable cold storage with Ledger. Maybe I need to get on Daedalus. I've been using the ADA Lite wallet. I'll check that out. The hardware wallet is updated on a weekly basis, but did an out-of-date upgrade to get in line with the release of Shelley. This is a significant move for Cardano, as it has now become one of the few major cryptocurrencies that can be safely delegated through cold staking. That's right. The other one is Tezos that I'm aware of. And what else? VeChain. VeChain gives you a dividend called VThor, which you can exchange for more VeChain. And what? Neo and Gas. Neo's not really talked about. Those are the only ones I know off the top of my head. When it comes to Treasure, one of the largest hardware wallets aside from the Ledger, users will have to wait until next week to see cold staking enabled. In a video posted earlier, Charles Hoskinson, the CEO of IOHK, explained that Treasure is on a monthly update schedule, which means that the Shelley upgrade will come on the 4th or the 5th. Most exchanges are yet to upgrade to Shelley, as Hoskinson noted that those that have listed ADA for a longer period of time might need to do some serious code cleanup before they can safely update. So if you have your ADA sitting on Binance, by the way, I never think you guys should leave your crypto on an exchange like Coinbase or Binance. It might feel safe, but it's not. They can shut those websites down. That's not good for you. So get your stuff off of that onto a Ledger. But those exchanges haven't upgraded yet, so you're going to miss out. Good. Let's take a look at the cryptocurrency prices now that we're talking about a big deal for Cardano. And the price certainly does not reflect anything exciting. We got kind of a mostly in the red here, but not by much. I mean, everything's holding pretty steady. Ethereum is still holding good. Bitcoin is still holding good. XRP actually is up. That's exciting. You would think Cardano would be up. Give it maybe a day, and I think we will probably see Cardano pump up a little bit. You know, I think it hit about 14 cents yesterday. I see 15 cents easily in the near future. Anything else exciting here? No, not really. Okay. In other news, the second COVID wave keeps Fed in crisis mode, punting on stimulus. We talked about this yesterday. So, printing money, guys. I was on LinkedIn yesterday and I saw a guy comment, and he's like, I don't even understand why we're even debating this. The Fed can just print money willy-nilly. It doesn't matter. Everyone can have cash. Printing money is nothing. Why doesn't the government just print money all the time and give us money? My goodness. On LinkedIn of all places. I don't comment on LinkedIn, but it's like, dude, have you heard of hyperinflation? Anyway, a troubling second wave of coronavirus deaths and infections have pushed the country past the grim milestone of 150,000 lives lost to the still raging pandemic. Sure. Federal Reserve officials met this week to set monetary policy and made clear and explicit for the first time that the virus, not policymakers, are in charge of the economic timeline. The path of the economy will depend significantly on the course of the virus, the Fed said in a change to its policy statement. This has meant that plans to launch a more concrete monetary policy stance to boost an incipient recovery have been delayed at least until later this year. Instead, the Fed remains focused on its emergency lending facilities and on ensuring that a public health debacle does not morph into an outright financial crisis. Keep printing that money. Steve Blitz, senior economist at TS Lombard, did not check the change in language. They are publicly and officially calling out on a downshift in activity post the Sunbelt surge and surrendering to it. Blitz wrote in a note to clients. The ability of the virus to shift the economy's gears, as it just did, makes any discussion of a future path for policy irrelevant. None of it matters until the course of the virus allows for reapplication of economic models and, by extension, allows for the return of meaning to a monetary framework. Until then, the Fed is in triage. Womp womp. Okay. The coronavirus cryptocurrency craze. Who's behind the Bitcoin buying binge? Yes, who's been buying all that Bitcoin? Let's see. Everyday people who have extra money from stimulus and big, large institutions. But let's see what he says. Trading of Bitcoin, Ethereum, and other cryptocurrencies increased sharply at the beginning of 2020, then jumped to a new high in February, a level that was sustained for the height of the coronavirus crisis from March through May. According to Coinmetrics, if historical growth rates can be maintained, Bitcoin's current daily volume would need fewer than 4 years of growth to exceed daily volume of all U.S. equities and fewer than 5 years to exceed daily volume of all U.S. bonds. That's huge, folks. Where is the C19 fueled trading volume coming from, and who will drive the future growth? Who's buying Bitcoin? A new study from Cornerstone Advisors revealed that 15% of American adults now own some form of cryptocurrency, a little more than half of whom invested in cryptocurrency for the first time during the first 6 months of 2020. Let me break that down for a second in my mind. 15%. How many adults are there in the US? Let's just say 250 million. So 37 million roughly own crypto. That's basically the size of California, or the size of Australia, or the size of Canada, or some other country in Europe. That's pretty good. And on average, these new investors obtained roughly 67.5 billion in cryptocurrencies, roughly 4,000 per person. The self-reported value of cryptocurrencies like Bitcoin and Ethereum for Americans who own these assets prior to this year is about 111 billion, or close to 7,000 per person. So it's going up. At 15% penetration, the U.S. cracks the top 10 countries with the highest adoption of cryptocurrencies according to data from September 2019. Yeah, because people are getting smart. Their salaries are not going up with the inflation rate. They've got to do something to maintain the value of their money. And if the government is just going to print $10 trillion this year to give out, then what's going to happen to that money? And can you imagine when the market does eventually come back, if it ever does, when we get back to normal, when restaurants and movie theaters, our sports arenas are open again, and none of this restriction stuff happens and we don't have to wear anything on our faces, we're going to see inflation like we've never seen before. There's going to be so much money in circulation and being spent on things that the prices of everything is going to go up. There's going to be so much more dollars chasing the same amount of items. Remember, folks, let's just take an example. So let's just say we're on an island, and on that island there are 100 chairs, and on that island there are $100, and one chair is equal to $1. Well, what happens if you dump $100 trillion on that island via a helicopter or a plane, and there's still 100 chairs? Well, there's going to be a ton more money chasing those same chairs. The price of those chairs is going to go up, but the chair is still going to be the same. So the value of the dollar went way down. That's how I like to explain inflation. Let's check out the demographics of these Bitcoin buyers. High-income, well-educated men. Yes, I'd like to think I'm in that category. Millennials and Gen Xers. For sure. Millennials comprise 57% of consumers buying crypto, and Gen Xers, 41 to 55, accounting for 30%. Yep. Bank of America customers. That's interesting. Overall, 21% of all consumers call Bank of America their primary bank. Of the consumers buying cryptocurrencies during the Bitcoin binge, almost half, 47%, are customers of B of A. You'd think Bitcoin buyers would be customers of the digital banks, but only 6% of them call a digital bank their primary bank. Oh, that's crazy. But I guess it's Bank of America. It's probably the biggest bank in the U.S. I never really thought about it. The Bitcoin benefit. It's hard to prove that holding cryptos is the cause of this, but 44% of Americans who have already invested in Bitcoin and other cryptocurrencies said that their financial health is much better since the beginning of the COVID crisis. That's in contrast to just 5% of all U.S. consumers. From a demographic perspective, the first-time investors are very similar to the previous group of crypto holders, but they're different in at least one significant way. They're changing up the financial institutions they do business with. Among the consumers who invested in cryptocurrency for the first time in 2020, half of them switched their primary banking relationship in the past 6 months. 1/3 did so in the past 3 months alone. The Apple effect. Apple card holders only comprise 5% of all credit card customers, but among those that do have the card, 47% own some form of crypto. Am I missing out? Is there something interesting about Apple Card? Whatever. The next wave of investors. So these folks are not really much invested in crypto. Let's see what they say. Women only make up 22% of cryptocurrency. And you want to know why that is, folks? Let me tell you. maybe this will offend you, maybe it won't, but I don't care. Women are less risk averse than men. Even my woman, she's cash gang all the way, and she's sitting on a pretty decent amount of cash. None of it's invested, and I keep telling her, this is ridiculous. Like, what are you doing? Like, the money, you're just saving that money. It's just going down every year. You're not getting much interest on it. Like, what are you doing? Women are very risk averse. I try to tell her though, like, it's more of a risk to keep your money in cash these days with the government printing out trillions of dollars this month, last month, the month before. Way riskier in my opinion. But yeah, minorities, African American, and Hispanic consumers who comprise 20%, 28% of all Americans account for 23% of current crypto investors. That's unfortunate. I've known minorities that have it, so weird. Younger and older, just 6% of Gen Zers and baby boomers already have cryptocurrencies. That's interesting about Gen Zers, but they're lazy, aren't they? They're like the worst generation ever, except for the based ones. I like those ones. Less educated. If you're less educated, aka you didn't go to college, that's what they mean by that. Might not actually mean educated in my opinion these days, but if you didn't go to college, you're less likely to be in crypto. The crypto hop for banks. The surge in cryptocurrency investing has been a boon for Square. Bitcoin revenue for its Cash app for Q1 2020 was up $306 million. Not surprisingly, reports indicate that PayPal intends to offer crypto purchasing through its PayPal and Venmo apps. That's cool, by the way, if you guys want. I don't have a referral code for it. Somebody sent it to me, but there is an app called Metal Pay, Metalpay. It's just like Venmo, but it's tied to their own cryptocurrency, and anytime you send money back and forth to a friend, you both earn crypto. It's pretty cool. So right now, you could use Venmo, but you don't get any actual money from using Venmo, unlike Metal Pay. And Metal Pay also has a crypto exchange built into it, so you can buy Cardano, I think, and a bunch of other cool coins on it. No joke. While many banks prevent their customers from buying crypto using the cards they issue, the mainstreaming of crypto investing raises new questions for banks, not just regarding allowing their cards to be used, but whether or not they should provide more cryptocurrency investment-related services altogether. They just got the green light to custody crypto. All the banks in America did, which is one of the big reasons a lot of people think we're having a pump right now. That was last week, I think. So, remember when JP Morgan, the CEO, Jamie Dimon, said Bitcoin is a joke and a scam, and then a year later it was confirmed that his bank, JP Morgan Chase, was buying a crap ton of Bitcoin. So, don't believe what they say, pay attention to their actions as always. That's fine. And just have a look at the precious metal prices for today. Gold is still holding really strong. Silver as well. I mean, you're not going to see much fluctuation in these prices and volatility like you would with crypto and certain stocks, but it's always good to check these prices. We should actually take a look about any news regarding Judy Shelton. Let's see. Yeah, the Senate is now starting to, you're starting to see articles pop up that she's dangerous. Of course she's dangerous. She's dangerous to the cabal. She's dangerous to the fiat monsters who have destroyed our currency and ruined our economy through debt. They don't like her. You're going to start seeing negative opinions about her because she wants us to get back on real sound money, the gold standard. That's good. If she's expected to win, that makes me happy. This is from MSN. That was 9 days ago, though. Yeah, see, like NY Times, you know, the scaliest, most communist news org of them all. God help us if Judy Shelton joins the Fed. Get out of here. Seriously, get out of here. God help us if she doesn't join the Fed. Seriously. Any news? 18 hours ago. So Murkowski, by the way, Rhino all the way. Not to be trusted. Not a fan. Clearly not a fan. I'm not going to read this whole thing. She's not a fan, and neither is Mitt Romney and Susan Collins. Okay, these are all three the biggest rhinos in the Senate. They're basically Democrats wearing the name of Republican. We all know who they are. so no surprise here. Anyway, seems like a good place to stop the video. Hope you guys have a great day, and God bless you all. Take care.